Hi traders, Zoran Kresovic here again. I had ourselves at Eightcap for a Wednesday afternoon AU time debrief or follow up on what we discussed Monday and to see what's actually happening in the markets around the globe. So how about we actually get stuck into it? Today was actually a pretty volatile day here in terms of the AUD, Australian dollar, and in regards to the also ASX 200, but we'll chat about that in a second. How about we actually follow up and see what's happened on the economic front over the last couple of days? So we mentioned on Monday, Bank of Canada had a consumer price index. So CPI data was actually coming out, and as you can see, year on year, it actually came at 3.4. Forecast was actually in line with the expectation and with the actual figures coming in, and previously it was at 4.4, so 3.4 at the moment. In terms of the actual monthly as well, so if you have a look at it, previously 4.1, and forecasted was 3.9, and the actual was actually 3.7. So what that is indicating is that inflation is coming off across the globe, I can confidently say, but especially with regards to the actual data from Canada and affecting the Canadian dollar. So what we've seen is actually over the last day or so when the data came out, Canadian dollar actually hasn't moved much, 0.5%, not a major move at all. But have a look at the charts if you are interested. Unfortunately, I won't be covering today Canadian dollar. I will actually get stuck into some other more interesting stuff. So let's have a look what's actually happening today. So huge news here in Australia. I mentioned on Monday as well, the consumer price index is actually coming out in AU. Last month was actually a huge surprise to the upside. The actual figures came at 6.8%. And the forecast for this month or for the previous month, the month of May, was actually a 6.1. So as you can see, it's actually coming at 5.6%. So obviously undershot. Majority of economists, as I did mention on Monday, indicated that CPI data was actually to come within the range of between 6.8 and 5.4. So lower end of the stick, and nevertheless probably a positive thing for the general market sentiment, or in terms of the obviously consumer confidence and so on, because obviously with numbers coming in a lot lower than previous month and also slightly lower than what market anticipated, we are probably likely not to see the 25 basis point interest rate rise from RBA, because they were fully data dependent on the CPI data coming out today and also tomorrow as well. So tomorrow we've got more data coming out. We've got retail sales coming in as well, so that's going to play a big part as well. Just to actually recap as well, on the rest of the week, we've got GDP data coming out of US, previously at 1.3 and obviously forecasted 1.3, and we've got the CPI data coming out of Germany as well. So that's probably the key takeaways in terms of the news. But how about we actually get stuck into it and we actually go into the charts. So as always, I like to look at the all the majors versus the dollar. Dollar hasn't actually moved much, which is kind of anticipated and expected, to be honest. The reason for that is there wasn't actually much movement overnight. The market sentiment overall, the volatility index is actually at its record lows, 3.5-year lows, and it seems to be what's actually unfolding overall across all the markets. So there isn't actually much movement. So hopefully, over the coming days with more data coming out, we will, and next week as well, we will actually start to see a little bit more moves in the market. But nevertheless, the US dollar hasn't actually moved much. And as we can see, since Monday, it's actually dropped off a little bit, but still within the actual range. So as I mentioned on Monday, 50, 100 and 200 EMA key levels, as well as the long-term downtrend line here. For US dollar to actually strengthen and move upwards, we need to see it break these levels. So we'll be watching that cautiously, because US dollar is actually going within the narrow range here. because we got the support level at $100 and then we got the downtrend line. So we are going into a narrow range. So they will be interesting to watch. Let's get stuck into the Aussie dollar. So Aussie dollar is actually come off and got sold off quite heavily on the back of the news. And at one point, it actually was above 1% to the downwards. So approximately 1.1 or 1.09% to the downside. Not a surprise, to be honest. It is kind of expected, and this is something that I mentioned on Monday, in case CPI data was actually way below the market expectation. And to some extent, it was actually kind of expected because the 6.8 was actually heavily overshot for the last month or the month prior to that. So we were actually expecting it within that range, but because the data came, way below, obviously that's indicating that inflation is coming off, consumer price index is coming off as well, and it seems like that it is slowly easing off, which could mean that we are coming to the end of the interest rate hike cycle. So as a result of that, obviously Aussies come off, and on the contrary, Australian index or Australian shares have actually gained and reversed from previous week's lows and sell-off. So what can we expect in Aussie at the moment? Well, we can expect, if we do see a little bit more downside, that 65 or 66 level to provide that support. So that's probably in the short term ahead of the retail sales data that's actually coming out tomorrow. Unless we see a massive surprise, I would actually expect Aussie USD to actually kind of trade within this range over the next week or so. If you do see, obviously, US dollar strengthening quite heavily, especially we've got quite a bit of data next week and the week after, then we could obviously see Aussie come off a little bit more and test this prior low around 65 cents. So Aussie at the moment within the range came off a little bit, but nothing out of ordinary. Let's go into Aussie Index. Aussie Index, as you can see, strong upward trajectory. This is a daily chart. Today was a huge day. So we've seen 1.2% upside only today on Aussie Index or ASX 200. If you go through the actual lows, end of the Friday lows, we've already recovered 2.38% of last week's 4% downside. So that's actually quite a punchy move, and it's telling me that buyers are actually in demand at the moment around these levels, and they do believe that obviously we might see interest rate hold, which could mean that green signal light for equities, and we could see further upside on equities. I did mention, and please check some of my Twitter channels as well as the YouTube channels. I did mention last week when I was actually providing some market commentary that I still believe there is an upside in equities across the globe because we are around those all-time high levels, and we are highly likely to probably continue that trend, especially if we do come to the end of the rate cycle, and especially from Fed, RBA, and the rest of the governments and banks. If they actually start talking about end of the rate cycle, because inflation seems like coming off, cooling off, which is obviously in majority of cases quite bullish for equity. So in terms of the upside run here, given the fact that we've actually got quite a bit of support around that 7,000 level, which I mentioned on Monday, we're highly likely probably to see more upside, at least in the short term, and potentially test that 7,400 level. If we do break above those levels and we take out the peak of 20th of June and also 17th of April, then there's nothing stopping Aussie Index probably to going and charging upwards towards that all-time high around 7,600 level. So if that was the case, we'd be probably looking at the actual upside itself of around, give me a moment, from the current levels, we'll be probably looking at 5.25% on the upside. Again, any negative news, any negative sentiment, 7,000 is the key level. So that's the support. Break below that, obviously, we would go heavily downwards and test some previous levels around for 6,400 level. But at this point in time, it looks like actually buyers are in control, and we could see some upside in ASX. Last pair that I would like to actually chat and discuss is pound versus US dollar. So from Monday, we've mentioned this. Bank of England obviously lifted 50 basis points last week. To some extent surprising the market, but nevertheless, way below the actual target rate of 6%. So 50 basis points was actually quite a punchy move. Over the last couple of days, we haven't actually seen much movement in pound. But again, as I mentioned previously on Monday, if you do take the prior highs, which was on 16th of June, around 128.403 mark, then we are likely probably to see pound push upwards. On the contrary, any downside, there is a downtrend line, there is a 50% Fibonacci level, and there is also natural level of support. So that's pretty much it. Pound hasn't actually moved much. We might get a little bit more movement in pound later on in the week, but more economic data actually is coming out the week after. Next week and the week after, we've got Fed interest rate decision. So I would actually be probably watching pound, because we could see some significant moves within the currency itself. That's pretty much it. I'm going to keep this one short and sharp. I would like to thank you over the last month for obviously watching me and listening to me. If you would like to actually follow my analysis and in general market commentary, please give me a follow up on my Twitter account, which should be available on the screen for you now. Give a like on the YouTube videos, please comment and get in touch with us at Eightcap, because at the end of the day, we are here to support you through your trading journey. Just to also mention, the next guest for the month of July will be Stuart McPhee. Stuart is a full-time trader and absolute phenomenal guy as well. I know him, on personal level as well. So looking forward to actually listening to his analysis. And if you do have any questions and so on, as always, please get in touch with us. But I wish you all the best, happy trading, and good luck.